Warm greetings to you all accountants. This is another presentation where we want to continue from where we left last time. So today's focus is understanding the statement of financial position. I think you can actually see from our success criteria, we need to state the 4 final accounts, and then we move on to another section, state the main sections of statement of financial position. Then after that, we need to move on to the drafting of the pro forma statement of financial position. Then our key terms today is non-current assets, then the current assets, the total asset, equity and liabilities, the non-current asset, then we have our current liabilities and non-current liabilities. Then we have got these key terms, the IS, SFP, the SOCE, then the SOCF, then the SOPL or CI. The first one is the income statement, statement of financial position, statement of changes in equity, statement of cash flow, statement of profit and loss, and other comprehensive income. I think you see this one. Let's start with the first item, state 4 final accounts. Okay, when they are referring to the final account, these are the books that you prepare at the end of the month, at the end of the accounting period. Usually we prepare the first final account that we prepare is the income statement for a level, statement of financial position is the second one, and then the statement of changes in equity. I think to your level, we are going to cover the first 3 items, the statement of income, the statement of financial position, then the statement of changes in equity. Then as you move on, we will move on to the statement of cash flows. But the final account is the income statement, statement of financial position, then the statement of changes in what? In equity. So we are done with the first item. Then we move on to the sections of the statement of financial position. We are trying to understanding the statement of financial position. The statement of financial position is classified into sections. The first section that it has is the non-current asset section, then followed by the current asset section. I hope you're taking down the notes. The first section of the balance sheet is the non-current asset section, then followed by the current asset section. Then we get our total assets. Okay, I think our key terms, they're very helpful at this point in time. Then we move on to the equity and liability section. There's another section that we have in our statement of financial position. Then we've got our non-current assets, our non-current liabilities. Then the last one is our current liability. Then we get our total equity and liabilities. But let's get into the nitty-gritties of this. I think it can be helpful if I use something that is very practical, something that you can actually see. This is a draft statement of financial position. We start with the first section, which is the non-current asset section, where we are supposed to record all our non-current assets. In terms of non-current assets, these are assets that are used, that are acquired by the business, not for the purpose of reselling them, but for the purpose of reusing them for generating income for the business. So non-current assets, the assets that are used for more than 1 year, right? We have got our premises, our motor vehicle, our machinery, and usually according to the historical cost concept, you are supposed to write them at cost. So the other heading that you are supposed to maintain here is the cost heading, then the cost of accumulated depreciation, then the other heading is the net book value. But how do you go about it? The cost of the asset, you get it in your trial balance. In your trial balance, you get the cost of the asset, then you get the amount of depreciation. Depreciation, as we have described in our notes, this depreciation, this is the loss of value of a non-current asset. Let's say you have bought your asset. Let's say this one, the premises was bought for 12,000 and it's now worth how much? It's now worth $10,000. It means it has lost the value of how much? $2,000. It means it has depreciated. Okay, so what you need to do, you need to find these figures in your trial balance, the cost of the asset, then you take the cost of the asset, then you put it under cost, then you calculate the depreciation. If it's given, the provision for depreciation, if it's given, you just insert the figure there, then you say 12,000, our 12,000 minus 12,000 minus 2,000, we get 10,000. I think you are good to go on that one. Then we move on to another non-current asset. Remember, this information will be provided in the trial balance. Okay, so you get the motor vehicle, you get the cost. The cost in this case is 12,000. 12,000. Then the depreciation is 3,000. So you know how to calculate the net book value. I think it's a very simple thing. I think you can actually see from this, you can say 10,000 minus 30,000, you get 7,000. Okay, you find the other non-current asset that will be there. The non-current asset that is there is the machinery. Machinery is costing how much? 5,000. It is depreciated by 1,000. It means we get 5 minus 1,000, we get 4,000. Then you are supposed to add. Now you do the sum for this one, calculate the sum for these items. Then you get 12 plus 10 plus 5, you get 27. Then you add again 2 plus 3 plus 1, you get 6,000. Then you get to the net book value section. 10,000 plus 7,000 plus 4,000, you get 21,000. Okay, what you need to do now is you need to double underline these first two columns. We are now closing them. We don't want to use these columns again, so we close these columns. Okay, so you put a double line as I've done here. Then you put a line just above, in between 4,000 and 21,000 to show that you are now adding these items. When you add, you get 21,000. Don't double underline, please. Don't double underline. Thank you so much. We are not supposed to double underline on that one. Okay, let's move on. Let us move on to another section of the balance sheet, which is our current asset section. Our current assets, these are assets that are acquired by the business with the intention to hold them or to have them in their stock or in their books for a period of less than 12 months. Okay, so they are liquid assets that are easily converted into cash. Okay, within a period of 12 months, they will be gone, or they could have been converted into cash. Okay, we've got our inventory. We take note. We take the closing inventory. In this case, we take this one, 12,000. We put it in the second column. Then we put our trade receivables. These are our debtors, our credit customers, right? In this case, they're 10,000, and there's a provision for bad debts. Provision for bad debts is an allowance that we give for those who might fail to pay us. Okay, so this is 10,000 minus. This is 10,000 minus 1,000, we get 9,000. You put this figure to the last column, okay, to the second column, right? You put a line here to say 10,000 minus 1,000, you get what? 9,000. Okay, prepayment, these are expenses that could have been paid in advance. Okay, these are expenses. Usually they are expenses that could have been paid in what? Advance. Any expense that is paid in advance is an asset to us, so we are going to put it again in our second column, cash at bank. I think you're very familiar with this one. You put it there. Then we have our cash in hand. You put it there again. You are supposed to add these two, all right? You're supposed to add these two, right? We add not two, all these, okay? You add all these and you get a total of 23,700. You transfer it to the last column so that it can sum with the 21,000. So we are going to say 21,000 plus 23,000. What do we get? We get 44,700. I think that is loud and clear on this one. Then you are supposed to indicate this is our total assets. So this is the first section, the first grand section of the balance sheet is done, or the statement of financial position, our total assets. Let me try to reduce this one so that you can see this in full. Okay, so that you can actually see this one in full. All right. So I think we are done with the first section. We need to move on to the other section, which is the equity and liability section. When we are talking of equity, this is equity. We are talking of the interest of our shareholders in the company. All right, the interest of our shareholders in the company. We call it equity. All right. So we move on to a heading which we call equity and liability section. Equity, we are done with the first heading. Let me just show you this one. Equity and liability section. Right, our equity, we agree this is the interest of our shareholders in the business, or in simple terms, for your level, equity refers to the capital of the business, the money that they use to start the business and the additional capital that they could have introduced in the business. Right, you write the heading equity and liability. Then on our equity, we start with the opening capital. It will be given. Let's say this in this case is 20,000. You add your net profit. Where do you get the net profit? This net profit, you obtain it from the income statement. You remember that income statement where you say a turnover minus cost of sales, you get your gross profit minus the expenses, you get your net profit. So this net profit is calculated. Please remember, we calculate this net profit, we get it from the income statement, the other final accounts. Please take note, this 12,000 should be calculated always. It's not given, you calculate it, then you insert it from there. All right, so you're going to add 20,000 plus 12,000, you get 32,000. Okay, this line you leave it like that, no need to label this figure. Then you list your drawings, and drawings are taken for private use. Let's say you are running a shop, then you find that maybe you have no stock to use at home, you have visitors, you take 2 kgs of sugar, then you use them at home. From the business, it means we call them drawings. These are goods taken for private use. Okay, so you deduct them. Okay, remember, you deduct them, please. They will be provided, but you deduct them. So 32 minus 2,000, we get 30,000. This 30,000 is a name. We call it closing capital. Closing what? Capital. All right. Even if you don't label it, but you should know that is closing capital. Then we move on to the other section, which we call the non-current liability section. Liabilities, these are obligations of the business that are payable maybe within 12 months, after 12, or after 12 months. Okay, so we are saying long-term liabilities, long-term loans. These are loans that are paid after maybe, let's say, 12 months. Okay, so we call them loan. Then it would be given, right? Remember, it should be there. If it's not there, you just leave like that. Then we have mortgages. These mortgages, these are loans given by building society companies, banks, usually to make you construct a building, a house, and so on. So maybe as it will be given here, it's $2,000. So 2,000 plus 1,000, get 3,000. You transfer it to the last column. Please remember, transfer it to the last column. Then you add 30,000 plus 3,000, you get 33,000. Remember, it's a matter of just adding here. Okay, let's move on down to the other section. We move on to the other section, which we call the current liability section. I think there's no need of skipping this line. Let me just delete this one. There's no need to skip this line. Okay, so we move on to the other section, which we call the current liability section. The current liability section, in simple terms, we are referring to those liabilities, obligations that are payable within 12 months. Okay, payable within how many? 12 months. We've got our creditors, which we call accounts payable. In this case, is 4,000. Our bank overdraft, when you take more than what is in your bank account, we have with this figure 300. We've got our owing expenses. Our owing expenses in this case, they're giving us how much? It's $200. Remember, these figures are provided in your income statement. Then you get, you transfer the total. The total for this one is how much? It's 11,700. 11,700. Transfer it to the last column like this. Then you add 33,000 plus 11,700. Then you get your total equity and liabilities, which is 44,700. And you can see something has happened. We have 44,000. Master this figure, 44,700. Let's check. It's called a balance sheet. 44,700. You can actually see that there's another 44,700. This is the time to celebrate when you see this happening in the exam. Your balance sheet is balanced. You are now a true accountant. It means you made all the entries right. All right. So this is what we are supposed to do. Maybe it's just as a recap of what you need to know, what you need to understand on this one. Let me try to reduce so that you can fit in this whole page. Would it fit? Would it fit? Okay. I wanted it to fit on this whole page so that you can actually analyze it from there. Okay. Let me reduce this size. Okay, and move this size, the one that is causing the havoc on this one. Okay. Let me make it small and small, maybe to reduce it to 12 so that you can actually see from where you are. Okay, let me reduce to 12. 12, you want to see, right? I think 12 would do justice. Okay, then we increase the size this side. Okay, All right. So as a summary, as a recap of this statement of financial position, you are supposed, number one, a recap, you put your heading statement of financial position as at 31 December. I used the year and year I used 2021. Okay, then you put your headings, the non-current asset, the heading, the cost, accumulated depreciation, the net book values, right? Then you move on to your current asset section. I think you can actually see from there. Then you are supposed to come up with your what? Your total assets. With the total assets, this should balance it with the total equity and liability. You move on to the heading of equity and liabilities. You start with the opening capital and net profit, then you deduct your drawings, then you get your closing capital. You move on to non-current assets, non-current liabilities, your long-term loans, your mortgages, then you move on to current liabilities. Then at the end of the day, you get the totals, and this total should agree with the total what? Assets. This total should agree with the total assets. Total equity and liability should be equal to total assets, as I have explained. Okay, when you're done, you indicate this is prepared by the accountant, and the accountant is here. If you've got any other question, please, I think you can actually see my number that is appearing there. We can actually discuss. But let me do justice to this. I need to give you an activity which I feel you need also to take or practice at home. Let me try to just go through the question. This is prepare a statement of financial position for Maximus Private Limited for the year ended 31 December 2020, 20 marks. So this is your trial balance. They are giving you, this is more of the cost. Okay, this is more of the cost. Okay, this is the cost. The motor vehicles also, this is the what? The cost. Okay, I want you to try this question, and this one also is the cost of the machinery. I want you to try this question, but they're giving you the depreciation, right? The depreciation is how much? 1,000 there. So you need to calculate the net book value, 20 minus 1,000. Then also maybe you've got our current assets in this section. Okay, I think you know where to put them. You've got your capital, and you have, all right, this is the trick here. Maybe just give you a hint on this one on your homework. You need to calculate the net profit first. It's not calculated. So I think you have the formula for net profit, then prepare the balance sheet, the statement of financial position. So what I want you to do is you pause the video. All right, you pause the video and then try to answer the question. Okay, let me maybe to allow those who want to take screenshots. Okay, you can take the screenshot for the first section. The screenshot for the first section. All right, I think it's now clear. Let me move on down to the other section. Okay, I think you've taken the screenshot. So wish you all the best in attempting this question. Please remember to subscribe to our channel and make sure you attend the lectures that I will be presenting. Okay, thank you so much for attending our lesson, and I hope you will balance. Please, when you're done, may you submit this work. Just inbox me. I'll tell you the platform that we are using to submit the work. All right, thank you, accountants. We can end here. We can say bye-bye for now.